Japan's Nikkei 225 just hit an all-time high, the first one since 1989. By the end of this, you'll see exactly who called that recovery. 4 years before it was obvious. 34 years after Japan's bubble burst, the Nikkei finally clawed back to where it started, and then some. Warren Buffett bet on it in August 2020, 4 years before it happened, and the question is, how? At the peak, analysts estimated the land under Tokyo's Imperial Palace was worth more than the entire state of California. Every piece was propped up by the piece next to it: real estate, stocks, and bank loans, all moving as one. Japanese banks lent against land that only seemed to rise. Bigger prices unlocked bigger loans, which bought more land. Tokyo prime office space was changing hands at roughly 350 times Manhattan prices, a number that meant something had broken. On December 29th, nobody in Tokyo thought the music was stopping. The record wouldn't be touched for 34 years. Here's the part that gets lost. The Nikkei didn't just stall. It kept falling for 19 of those 34 years. The bottom came in October 2008, 6,994 on the Nikkei, an 82% wipeout from the all-time high. Over those same 34 years, the S&P 500 returned 1,300%, and the Dow grew 14-fold. Corporate Japan never cleaned up. Zombie banks, cash hoards, and cross-shareholdings that made accountability impossible for decades. By 2020, the Nikkei was still sitting at half its 1989 peak, and that's when Buffett started buying. The weird part isn't that Buffett bought Japan, it's that he borrowed the money in yen to do it. Berkshire's yen bonds paid coupons near 0.5%. The 5 trading houses paid dividends running 4 to 5. The 5, Itochu, Marubeni, Mitsubishi, Mitsui, Sumitomo, are Japan's Sogo Shosha, each spanning coal, food, energy, and finance. In August 2020, every one of them traded below book value, priced as though Japan's paralysis was the permanent state. The carry had already started paying, but for that discount to close, something in Japan's corporate structure had to give. 3 years after Buffett bought, Japan's own stock exchange broke 3 decades of corporate deadlock with a single rule change. Any company below book value had to publish a plan to fix its returns or explain the failure publicly. The yen fell to 34-year lows near 145 per dollar, making Japanese stocks look like a bargain to every global fund. Nvidia posted blowout earnings on February 21st. The Nikkei jumped 836 points the next session and closed at 39,099, past the peak. 3 catalysts in 14 months, and Berkshire had been holding close to 9% in all 5 through every point of that climb. The $23.5 billion end 2024 value was the bonus. Berkshire's trade was profitable before the Nikkei moved an inch. The most profitable thing you can do is see a 34-year problem that's just about to be solved. Like and subscribe to Marker in Mind for more calls like this one.